My name's Miles Pitcher. I'm the owner of Superior Lending. Been in the business for a long time, since 2001. We are super excited about a new change that has come from FHA that is going to help some of our borrowers be able to get rents to offset their mortgage or qualify for more home. And we're talking about getting rents off an accessory dwelling unit. So let's take a look at this and jump into it. So this came into effect Monday, October 16th, 23. Announcement from HUD, or who runs FHA, and this is effective immediately on there. You can read more about it on the internet, but we'll hit some of the highlights. I want to first make a note that an accessory dwelling unit, or sometimes called a mother-in-law apartment, mother-in-law suite, is what we're talking about. These in the past have been treated as single family units or homes that have an accessory unit added onto them. And they may be like a basement apartment. They could be an additional cottage behind the house, or maybe there's a detached garage that has an apartment above it. These are accessory units. They are different than duplexes. The 2 to 4 unit properties, duplexes, triplexes, fourplexes, we've already been able to count rents off of those for a long, long time. We count 75% of the rents off those other units. We are just talking about owner occupied today. That is a requirement of FHA. And the big change is that, hey, now if you owner occupy a single family home that has an accessory unit, you can count the rents off of that other accessory unit. A lot of stuff here on this list, but I'll hit it real quick. Before this change, we could only count ADU rents on conventional loans. And that was okay, except that lower credit borrowers were really hurt on those conventional loans. FHA is super friendly to mid to low credit borrowers. We will be able to count 75% of the rents on existing accessory units. I mentioned about the low credit. The other thing that's really cool is we have a renovation loan that's called a 203K. It's an FHA loan. And now we can use that renovation money or construction money to be able to buy the home. And you can also refinance and do it also, but get construction money then to improve a home and add on an accessory dwelling unit as long as the city allows it. The guidelines will now let us count 50% of what that accessory unit will create or bring in as you build it in with a renovation loan. So let's take a quick look at some numbers real quick. So first, I want to show what it does to purchasing power. So we're taking the same exact loan, FHA loan, comparing a single family home versus a single family with an accessory dwelling unit. You can see that it boosts us up from, in this example, of 540 is what the max qualifying was. Now we can get up all the way to 600. And on this certain scenario, we're able now to get $1,400 a month of rent off of the ADU. We offset the mortgage with that. It saves our client almost $1,000 more a month by being able to do this. Of course, the down payment went up a little bit, but look how much it saved our client by being able to do this, and they were able to buy a higher priced home. So really, that is a win for our clients. Let's compare this now against a conventional loan, FHA versus conventional, both accessory unit. Conventional, you can do as little as 3% down on that, and that's through a special loan program called Home Possible. For first-time home buyers, there are some income limiting requirements there, but it has a smaller down payment than FHA 3.5%. However, the interest rate on the FHA is lower, and I ran this at a 740 credit score. You can see that it's right around $200 a month less than the conventional loan because of the lower interest rate. So we're super excited about being able to count rents now on these accessory units. It's going to really is going to help our clients with the affordability problems that are going on right now. Here's how you can get a hold of me. We love being able to help our clients with this, strategizing and finding ways to get them comfortable with buying the home and getting the payment where it needs to be. Feel free to reach out. Have a good one.